Good evening, everyone. This is Tanisha from Incubate Int, and I welcome you all to this session. I extend my warm greetings to each one of you present here for joining us in this session. We are kickstarting this series on funding, and this is the first episode that we are having. In this episode, we're going to learn how venture capitalism is taking the center stage in today's global economic condition. Venture capitalism is a topic of utmost importance, especially in today's pandemic era, and we want to learn about it more each and every day. But if you are confused about how to learn and when to learn, I must say that this is the episode and this is the series and that you should attend. To know more about this topic and to enlighten ourselves with the knowledge, we have our speaker of the day today with us, Mr. Tushar Kansal. We are kickstarting this series on funding, and we are going to understand how entrepreneurs, startup founders, innovators, and anyone who is planning to raise funds for their organization can do so. As I already mentioned, we have our expert speaker, Mr. Tushar Kansal, with us today. He is the founder and CEO of Consultancy Ventures, India's leading venture capitalism and private equity firm. With an accomplished professional and experienced career in multiple sectors from venture capitalism to Big Four consulting, he has also acted as a mentor and judge for several startups and entrepreneurship cells at India's premium institutes like IIT Delhi, ISM-Dhanbad, IIT-Mumbai. Tushar, I welcome you all on behalf of Incubating to deliver this talk today.
Thank you, Tanisha. Thanks for inviting me today. And I have been watching Incubating since a long time now. The management and the way it conducts its activities with such great professionalism. And I was looking forward to be a part of this talk here with your team. And thank you for moderating the talk as well. I'll just give a brief background about myself. Myself, Tushar Kansal. I have handled senior private equity transactions at Deloitte and Touche. Have also been part of the team at Brand Capital, which is the venture arm of the Times of India Group. And I was heading treasury at the $3 billion MTS India, the Russian telecom company, and was CFO with a logistics company which is owned by Guggenheim Partners, the American PE fund. In my company, Consultancy Ventures, we help uh, venture capital funds, we help startups, and we help the founders and the team at these startups, and we help them across documentation like pitch deck, business plan, valuation, and we also help in arranging venture capital. I'm also personally an investor in four companies, and one I exited. Academically, I'm trained from Harvard Business School, MBA in finance from Delhi University, and also am an engineer. So thank you so much, Tanisha.
Tushar, you have expertise in fields of finance and business advisory, from venture capitalism to fundraising. You've studied at premium institutes across the world. We are really hoping that we can get to learn some insights from your knowledge today. And we have a lot of budding entrepreneurs, startup founders today. I really hope that we get to know something or the other how venture capitalism works and what are the scenarios we face in a real world when we actually look to get some funding for a startup. You have shaped the dreams of many startup founders, as I've seen in the past few years, and we gathered here today to learn something from your expertise. I would like to hand over the virtual mic to you. Please take forward the session, and we'll be answering some questions that are raised by the audience at the end of the session.
Sure. Thank you, Tanisha. So it is very important for me to educate the audience today about why we keep on talking about venture capital, why we keep on talking about Elon Musk, about Jeff Bezos, about people who have created wonderful companies, who have actually worked towards uh, making their dreams a reality. And venture capital is a subset of the larger economic situation across the globe. I would start by telling you some facts about how the global economy is functioning, and why venture capital has taken center stage. So what has happened is that the Western economies, they are developed economies, and initially they were sustaining on manufacturing and a little bit of services. But what happened was that as and when they became rich, they started giving up on industries which are polluting and which require more amount of labor. And those industries, they started shifting initially to Japan, when by 1970 Japan had taken over a large part of manufacturing of the US and Europe, and that's how Japan became rich. So seeing Japan, the way it became rich in a matter of 30, 40 years, the other countries started copying Japan. And South Korea, Southeast Asian countries like Malaysia, Indonesia, Singapore, especially Singapore, they copied Japan, and they started taking manufacturing from the West. And all this manufacturing shifted to these locations because these locations were very lax on environmental standards, and they had cheap labor. And just as the Ford's founder had said, if you want to make an economy developed, then create manufacturing, because the labor, the management and labor, they earn money by working there, and then they become middle class. They start buying goods, the economy grows. So it is, so that's how these economies have grown. But what happened was, the West wanted to retain its hold in the global economy. So they created a new type of economy, which is based on managing money. So they became the zamidars, they became the money lenders to the whole world. And they could do it because their currency was strong. So they could print as much currency as possible because the world started using that currency. So Saudi Arabia sold oil in dollars, which means that there was demand for dollars of billions of dollars, and US was printing dollars freely. It has been printing dollars freely since almost 50 years now. And all those trillions of dollars are sloshing around the global ecosystem, and it is chasing returns. So, if you have to make money from money, you need returns. So, if you put your dollars in a fixed deposit in a bank, you get 0.5% per year, which is nothing. If you put your euro in a bank, you get 0.25% per year. So, the safest investment, which is the fixed deposit, does not get you any return. So, what gets you the return? The return is made by betting money on various asset classes, as we call it. And which are these asset classes? These are stocks, which means shares of companies. It means commodities, copper, aluminium, silver, gold. And gold is really special because gold has been seen as a substitute of currency. Because earlier, before Bretton Woods conference, every currency had to be backed by gold. But in 1971, the US removed the peg, we call it the peg of the dollar to the gold. So it could print as much dollars as possible. Now, what has happened is the asset prices are on the roof. We have commodities becoming 200 times costly. We have stocks. Look at Tesla's valuation. Tesla, which is a company which will produce its first profit in 2023. It is yet to make a profit. The valuation of Tesla is $900 billion, which is more than the combined valuation of all car makers. So this is what is happening practically with the world. And the craze is so much for chasing returns through asset classes that real estate bubbles are there, stock market bubbles are there, commodity bubbles are there, and now cryptocurrency. It is supposed to be a new asset class. There are so-called currencies which cannot be used anywhere. It is basically a number on the screen on which you are betting. And now there are thousands of currencies which people have created after Bitcoins and after Ethereum and after the popular ones like Dogecoin and Shiba Inu. And now the betting mania is going from uh, stocks and gold to cryptocurrencies. In the short term, they are falling down. Now, where does so sorry, the Western world has become the lender to the whole world by printing dollars, by printing the currencies. And this trend, after 99 dot-com bust, after 2008 Lehman crisis, and after 2020 COVID crisis, this trend of printing money to so that your economies don't go into a recession, this trend has increased, and the central bankers of the world are printing money. Ben Bernanke used to call it helicopter money, that you print money and shower it on the economy. And so inflation is rising. The more money you print, the less would be the value of that money. So inflation is rising. Now, where does venture capital come in this whole issue? Any investment we make, it is chasing returns, but it is also dealing with risk. So there is a risk profile of each asset class. Now, if you are investing in a company like Reliance on the stock market, it is a AAA rated company. So the market tells you that the risk is lowest, but the Reliance share does not double overnight like the risky shares do. So one is always balancing risk versus reward, greed versus fear, greed and fear, risk and reward. There comes venture capital. Startups are those companies which are started by students or students plus two, or in some cases by experienced corporate professionals. These are supposed to be technology, some bit non technology, and they are supposed to break the existing hold of the existing companies in the market. But the success of the percentage chances of success of these startups is very less. So there is a portfolio approach which investors have. You invest in 10 companies, 7 will close, one will become 2 times or 3 times, ninth one will become 10 times, but that one single investment will go 500 to 1000 times. So your overall return on your portfolio would be quite good. So there have been studies by Credit Suisse which said that any company with more than $1 billion valuation is called a unicorn. So India has 35 unicorns. It means 35 companies which are not listed on the stock market, which are private, and whose valuation is more than $1 billion. Now, Credit Suisse did a research. They studied the financials, the financial performance of a lot of unlisted companies, and they worked out their valuation. And it said that just like in the first week of April in this year, 4 Indian companies became unicorns. So Credit Suisse said by the end of this year, 50 unicorns will be born in India. That is the money which is chasing this country. We are talking about highest ever FDI in the history of the country at $64.5 billion per year. It is nothing as compared to China, but our economy is one fifth that of China. It used to be the same in 1980, but because of so much socialism, we have totally killed our economy. So now I can talk on and on about the background, about venture capital and everything. Uh, the very thing which matters to you all today is actually uh, that how can you approach the investors? You have created a business idea, you have created you have found a solution, and you want to approach these investors. And I can talk about which are these kind of investors. There can be angel investors, venture capital investors, venture capital funds. They can be private equity funds. They can be hedge funds. They can be family offices. So all these are different types of investors. Now let me take you to one particular slide, which will tell you a bit uh, about uh, yeah, it'll tell you a bit about what all to present to investors. Okay, so you need a pitch deck, which is a 15-slide document. It is very important, but main thing is that uh, this, on your screen, you can see these are the areas where the investor will catch you. He will ask you about all these things. Now, if you are creating, for example, Modi government allowed shipping on rivers. Earlier, it was not allowed. In a country like India with 1.3 billion people, shipping on river was not allowed. So he opened this sector. Now if any entrepreneur can say that I want to create a company which will provide shipping in on the rivers, so he has identified a problem statement that till now there is hardly any shipping on rivers. So he wants to address that problem. And always remember, the problem can be very complex, but the solutions are typically very simple. Don't create a complicated solution, create a simple solution. And the simple solution is, it will take a license from the government and start streamer services, to maybe steamer services to in maybe like 25 locations in India. That becomes a solution. Now, if you want to have a scalable business, that solution has to factor in the smartphone. It is owned by 70% of Indians, 70 crore Indians. Then further, more people, they are actually having feature phones, but those feature phones are also, you can utilize SMS and some other features. Now, your solution, if it incorporates technology, then it will go very far, because the flavor of the season is that people have gotten used to technology. The march of technology is going on since dot com boom and bust, since the Lehman crisis. And after COVID, people are on Robinhood, on Zerodha, they are betting on shares. They are ordering food by Zomato and Swiggy. They are ordering from Amazon and Flipkart. They are buying apparels from Myntra and the other private label direct to consumer companies. Uber and Ola, they are using through the app. Then I can name it. It is unending. Look at where the stock markets are globally, and look at the economies which they represent. You will find that vis-a-vis the situation in the economy, the stock markets are booming. And the ground reality is that COVID has destroyed the savings of a large part of middle class, and the COVID has destroyed sectors throughout. But the stock markets are booming. The stock markets are supposed to be a reflection of the economy because it represents businesses. But it is booming because people are sitting at home, they are work from home, they have a smartphone in their hand, and they want to use the smartphone to do something, and most of all, make some money. So that is the craze behind cryptocurrencies, behind valuations like Microsoft crossed $2 trillion valuation. I mean, think of it. Indian GDP is 2.7 trillion, and Microsoft's valuation is 2 trillion. So we have companies the size or more than the size of countries. And so your solution should have the smartphone in mind. Now, one of the most important things is the team behind. uh, you should you know the Western the VC ecosystem, they use this term a lot: hustlers. Hustle. What is a hustler? Who is a hustler? So the team should have hustlers. Hustlers are people who don't give up, who look at a no with a maybe and look at a maybe with a yes. Come across teams, and also the team should be balanced. You can't have uh, you know like you create a product and you have only two product founders and no other specialization. You should have marketing, you should have finance, it should be balanced. It's not necessary that all of them should be equity holders, but it should be balanced. People, when we investors, we talk to other investors, we always say, bet on the founder more than the product. Founder first. And one subset of this founder first approach is founder market fit. That apart from product market fit, apart from minimum viable product, these are terms which we use to see how clearly the business is defined. We see founder market fit, and hence the team behind is one of the most critical and important part of any investor's eye. The next is market size. See, if you are addressing a very small market, naturally, how far can you go? Your company valuation can become 50 crores or 60 crores or 100 crores. But if you are targeting a consumer market in India, which is in trillions of dollars, if you are targeting a consumer market, for example, and the product itself has a market size, naturally, your valuation will boom. You look at Licious, the meat company, which is a D2C company, direct to consumer. You look at Boat, the headphones. It raised $100 million in 4 years. Look at Mama Earth. It became a 100 crore turnover company in 3 years. So all those consumer companies which are especially using the D2C route, direct to consumer route, so they are having a very large market size. The next is product. Your product should be like, I hope you have great product and you have great faith in your product. And if the product is so good, you can actually do a demo with the investor. You can tell him that we will answer all your questions on the business, but let us show you the product. And the product is of no use if it doesn't have a business model. It's earning capacity. Paisa kaise banega? How will it make money? So so that's the importance of business model. Then traction, as in how much business you are currently doing. I see a lot of founders who come to me who talk about that their traction is very less. So I always suggest them that you do some more business, and then you can look for funding. And because the investor loves it when he sees revenue, and when he sees that this particular product or service can make really good money. I came across a education technology company, edtech company, run in a tier 2 city in India. uh, Amazing business. I mean, they provide teaching for CAs, CS, law, and they use it by a proprietary method, as in nobody can steal their videos. And 2.5 crore turnover in two, I mean, in 2-3 years, they have reached 2.5 crore turnover and profit of 1.25 crore, 50% net profit on a 2.5 crore turnover, just by intelligently running the business, managing the digital marketing well, not splurging money, and managing the quality of teaching well, managing the platform well. And so that is the importance of traction. Then competitor analysis is very important. um, Many times people use really long language to explain something. It becomes very difficult to understand. Sometimes they use philosophy, sometimes they use really long language. So if you name your competition to the investor, then he will get to know very better that what you are trying to create. But because you are telling the name of the competitor also, so you have to give your competitive advantages also, that how you are better, how you are different. uh, and make giving financial projections to the investor is also very important. As in the next 5 years, what do you plan to achieve? How many customers, how many sales across geographies, how much revenue, how much operating profit, and how much net profit. And the biggest indicator of your company's performance in the next 5 years is going to be free cash flows. That what is the net cash flow available to the business from its business, available to the founders, to the investors from the business. So, free cash flow is very important metric. Last, you have to be very clear with the investor how many funds you want to raise and the use of funds. Like you want to put in marketing. If you are a consumer company, the investor will really drive you, tell you to put more money in marketing. It can be for product development, for team building. It can be for a number of purposes. But if you define it clearly, then the investor will think. Otherwise, if you are not clear why you are wanting to raise 5 crores, then the investor might classify you as a person who just wants to raise money for the heck of it, and that is a very sad situation to be in. uh, with the investor, because most probably he'll turn you down. The last is future roadmap, which means how many customers you'll achieve in next 5 years, on what month you plan to achieve them, what is the any milestone, like launch of a new office, launch of a new geography, and stuff like that. So I've just explained everything here only. These are the slides in details, but I won't take them right now. I will rather answer some questions for you, and and happy to answer questions for you. So, Tanisha, this is. Are you able to hear me?
Yes, Tushar. So, while you were explaining, I had a question in my mind. It might come out to you as silly, but in the beginning of the session, you mentioned that in India currently we expect that by the end of the year there will be 67 unicorn startups. But as we look at the reality this year, the pandemic has broken the backbone of Indian economy. So, what are the perspectives that we are looking at? Is it something imaginary that we are imagining, or is it the reality that India has that economic potential at this point to convert into such a big number?
Very smart question, Tanisha. Very, very, very smart question. Um See, India is a high beta economy. What it means is we are very sentimentally driven. So there are three factors which move the stock markets, and stock markets are a reflector of the economy. So, one is sentiment, one is liquidity, and the third one is the economy, the economic fundamentals, which includes inflation. Now, you said that why is so much of money coming in to India, 65 billion dollars, right? This is what you said, right?
Yeah, something like that. I was asking that you mentioned that by the end of the year there will be around 66 unicorn startups in
Unicorns.
India.
Okay. Yeah, yeah. So the thing is, when the GDP, gross domestic product of India, when the COVID came, it fell down. It fell down by a huge margin. because there are three parts to a GDP: consumption, investment, and exports. So exports fell down because all those global shipping was blocked.
Absolutely.
Investment investment has always been low in India because the money available for investment is low. um, and public sector banks had lent 20 lakh crores in 2012 by the government, and out of that 20 lakh crore, 13 lakh crore, 65% money didn't come back to the banks. So their lending capacity to infrastructure is very less. So that is why we see a problem. Now consumption has been strong, but when COVID came, all three fell. Consumption fell, investments fell, and exports fell. Now what this unicorn thing is showing is that after vaccination goes through, which will take this entire year,
Absolutely.
because we are a high beta country. High beta country means when we fall more than global average. When we rise more than global average. We are sentiment driven. So that sentiment, it will start picking up across sectors once COVID vaccination goes through. You will see 15% growth rate in sectors, 30% growth rate in sectors from a low base, because the base has already come quite low. So they want to capture all this. The investors, they want to capture all this, and don't forget, the world is moving towards protectionism. Everybody earlier, they were saying talk global, make a factory in China, you create global supply chains, you put your money in commodities in Africa. And now every economy is saying, we will have these businesses in our country. Thank you, we are not putting our money in China.
Yeah.
So India, just like Twitter is seeing big problems now, and Coup app has come.
Mhm.
Similarly, why Coup got $30 million within 3 months of launch? Because Tiger Global is betting that Coup will become a big entity in India, because the Indian market is very huge. And a
Yes.
lot of the valuation of these foreign companies, they come from customers in India. Twitter, Facebook invested $5.6 billion in Geo. So it was basically to protect its Indian market, and that's why they invested so much in Geo, to not only to protect their market, but also to grow their market here. So I hope
Yes.
I've answered your question. If you can,
Absolutely.
if you want anything specific, just come again. I will try to answer it better.
Sure. We have some questions in the comment. So, we have a question: what is more important while pitching an investor? Number of active users, which will bring the business, or good current cash flow?
Thank you, Ayush. This question is the favorite question which I get on each show. But every time I answer, I try to answer it very in a better way. So I hope I answer your question better. Uh, See, important. Both things are important. Your current cash flow is important, and your number of active users are important. So why is it important? See, I see businesses who come to me from the media side. They have created an internet-based media platform. When I check their, there is a term for that. I'm forgetting it. When I check their, what are their posts in terms of audience, what are their posts achieving, I tend to find that the active user base is very less. So many of them are actually, so maybe that media did a lot of sponsored posts and created those likes. But end of the day, if the active user base is not there, then your conversion ratio will be poor, conversion to business. So active user base is very important. Current cash flow, see, a large part of the uphill climb, which is finding an investor, a large part of the climb is this dilemma. And the dilemma is, right now I'm small. I can't put much money in business. I have less cash flows, but I need money to generate cash flows. And so, I'm struggling. So, this dilemma, it is a camel's hump. You need to cross this hump. And, uh, you know, uh, always remember, people will tell you, digital marketing company might tell you that you put money on Facebook and Google, you will see a lot of traffic. But those startups who are wise, they use content strategy, they use SEO, they use wise strategies and get business by spending less. So you can be a person who spends 75 lakh rupees in the hope of getting a large number of users, or you can be a person who invests 9 to 10 lakh rupees and generates 1 crore worth of business. This education technology company I told you about, they spend 1 rupee on marketing, digital marketing, they get 7 rupees turnover. And out of that 7 rupees, 3 rupees is their net profit. So, his proposition to the investor is very simple: put in 1 rupee, I will generate 7 rupees. And out of that, 3 rupees profit. So, create such business models. It is in your hands. If you are very laid back, you don't want to be a hustler, you don't want to research about growth hacks. There are many growth hacks available on internet. Read Quora. If you read Quora, you will get to know so many growth hacks. So use those hacks, use intelligent marketing, and then you will get the active users for less money, and then you will get good cash flows as well, because the conversion ratio will be good. uh, just to sum up the answer, both are important. If you have good cash flow, it becomes very easy for the investor to convince himself that yes, the valuation is justified, because the cash flow clearly are there, and he can put his crores into you very easily. Thank you.
I think that was very well explained by you, Tushar. Let's move on
Thank
to the next question. Which is better, VC or angel investors, and how to decide which to pursue to invest in a startup?
VC fund. If you read today, Oreos raised $30 million special fund, and this $30 million special fund they raised so that they can keep on putting money in their existing companies. Now, you are a startup. You are in investment phase, which means that you are still burning money and you are having losses because you are investing the money for future capacity, right? So naturally, suddenly COVID comes. Which investor will you like? An angel investor who says, my money bandwidth is very low. So, right now, I can't help you with it. Or a VC investor who says that, scale down your business, conserve your cash, we will still keep on putting money and supporting you. But always remember two things. If you are doing well as a business, money will come to you, whether it is angel money or VC money. So ultimately, it really depends how you are running your business. I hope I have answered your question.
Yes, absolutely. I think how you run your business
Or
is
you
the
can
backbone.
also, I'm sorry, Tanisha, or you can also raise a bridge round, which is a less than 1 year round. And you can, if your balance sheet is still is good, you can raise a bridge venture debt also, venture debt from any of the venture debt players which are available. Yeah,
Okay.
Tanisha, sorry. Yeah.
So I think that was very well answered. I think now we'll move on to the next question by Mayank. When is the right time for fundraising for a tech startup if their idea is good but haven't made so much in profit initially?
Mayank, Take my answer with a pinch of salt. I have seen people who put in 1 crore rupees, created a tech product, and now they are trying to sell it in the market. Sell it, I mean, create a business from it. So, my sense is that approach is not as good as creating, for example, that product had 5 parts. So you were addressing 5 parts of the market. So you develop your tech, your product for one part. And for that one part, you do proof of concept. After you do proof of concept, you do MVP, minimum viable product, which means that it shows the capacity to earn. And once you do your MVP for that part, you do a market research, a survey, develop your pricing strategy. Maybe you have 3 kinds of pricings for 3 type of customers. Develop your distribution strategy, or whether you will charge in commissions monthly, yearly, and whether franchise, or you will keep master franchise or distributors. So all these things, once you develop, then you will achieve your PMF, product market fit. And once you achieve your PMF, you have done your MVP, your proof of concept is there, you can show your product, give a demo to the investor. And the investor, for a start, will put in, if it is an angel investor, rupee angel investor, he will put in 5 to 25 lakhs. So you will get a good handle to work more on the product. And if you find a dollar angel, those who are earning in Singapore, Hong Kong, Dubai, they might put 2.5 crore, 3 crore. I saw a real estate guy, he put 7 crores, $1 million. So it really depends. And if it is a VC fund, it can put in, like I know 24 incubators and accelerators. They put from 15 lakhs to 25 lakhs. If you go to the government schemes, they will put 25 to 50 lakhs, but it will take you more than a year for the paperwork. So that is a very thankless kind of thing. If I take you to angel investors, they might put money early, and VC funds, once they like the product, they put in money well. So all these options are there. Um, Profit, don't bother about profit, the word profit, but bother about revenue. That you should show revenue. Profit we understand, like Jeff Bezos, Amazon, till 2014, right from 1994, when Amazon started, to 2014, Amazon made losses. And the investors used to say, uh, why are you not issuing dividends? Because the investors, they love dividends. When they get dividends on their shares, they feel it is recurring income. So Amazon went against the market norm. They said no dividends, but we will put all the money we are earning into new age businesses. And once these new age businesses become mature, all the cash flows available will come to the main company. And with this increase in net cash flow, free cash flow for the company, the valuation will rise exponentially, because the valuation of the company is in multiples of the financial performance. So that's how Amazon became the number one company globally. So otherwise, feel free to reach me out on my LinkedIn and my website. Tanisha will share that, and my email ID. And feel free to reach out if I can answer a better way, or you can ask it again, any other question. Thank you, Tanisha.
So I think we will definitely put your LinkedIn, your website, and email link in the chat box because that will benefit a lot of people. We've already dropped that,
Right.
and I think you can just give your valuable insights to some budding entrepreneurs. Moving on to the next question, we have a question by Divyam. How can a think tank based startup convince investors?
Mhm. Very nice. Think tank based startups. See, up till now, the problem is that one is a global phenomena, one is an Indian phenomena. The global phenomena is that Google has made content free. You can find anything on Google, and everything you have read till now or will read in the future, it is available for free or by paying a little amount on all these education companies. If you want to skill yourself, you don't have to go to for degrees, certificates. Everything is on internet. The second phenomena is that in India, people think that content is free. They think gyan is free. So it is a local phenomena also. So people like paying for specialized knowledge uh, more in the West and more in Southeast Asian countries, but little bit less in India. And uh, so now think tank. I have been a part of really important think tanks, whether on the political side or on the defense side or on economy side. Uh, and these think tanks, they they don't grow big on equity. Uh, Many would grow big on equity, but it is not like probably one in 500 startups you will find a think tank. And it is a very services oriented business, right? End of the day, uh, you have people. Your human resource is your main resource. So I think I don't know what is the think tank you have created, but if it is it is something which is very unique, and it is not only a good solution for a problem, but it has a business model. So Speakin, look at Speakin, Speakin, Speakin. They, it was created not very long back, and they created a network of speakers, and the industry bodies adopted them. And Deepshikha Kumar, she is the corporate lady who runs it. And it is not a think tank, but it is a speaking business. It is a business of speakers. And she has enrolled 18,000 experts in more than 500 different cities. So look at that. And yesterday a startup had come to me, and it is very nice that you have asked this question. They create expert banks, and expert banks are actually you have big fours like PricewaterhouseCoopers, Deloitte, Ernst and Young, KPMG. All these companies have the best of the companies empaneled with them. So Deloitte works for the top Forbes companies. Now these companies need different type of expert advice. Now if Deloitte or EY or whichever, if they were to employ these experts on a permanent basis, it would mean a lot of cost, lot of expenses. So what they do is they have certain companies called expert advice companies. They have experts in them. So what they do is they will pay 300, 250 to $400 to the experts per hour, 250 to $400, and they will charge Deloitte $1,200. So they will make a $800 per hour kind of margin. And these companies are yesterday only I got to know that they are doing quite well, and because they have such good cash flows, they are fundable also. But Indian mindset, when Technopack, the retail consulting company, when they wanted to, they were, predicting that Indian retail market will boom, and they had come up in a big way in India. So that time, what happened was that Reliance was setting up. Uh, Reliance was setting up Reliance Retail, and Mr. Arvind Singhal, who had created Technopack, he had used to have a lot of meetings with Mr. Mukesh Ambani, and during those meetings, when they m- Mr. Arvind Singhal told Mr. Mukesh Ambani that you buy me out. You are creating Reliance Retail, so you buy me out. And the figure was, I think, around 400 crores. But Mr. Ambani said, why do I need to buy a services company? I will poach all your employees and create my own consulting company. So again, that mindset uh, thing, it is quite, I think it's quite an Indian kind of thing, but I don't know, it can be a global thing also. But this is the thing. You're on mute, Tanisha.
Oh, so I was just saying that it was a very well explained answer, and we have very interesting question. Shark Tank coming to India. Your reaction on business reality shows in India now?
uh, I don't have anything against the reality shows. Um I don't watch TV. I quit TV 3 years back because the news here doesn't make sense. It's all emotion and shouting, and it doesn't make sense. Any country in the world, if they see Indian news, they will faint. So, you know, you go to Singapore, you are in a five-star hotel, you turn on the TV, and it is so gentle. They are talking about some murder in a very gentle and respectful fashion, and not showing you pictures of those things. And so, the sensationalization is missing, which is a big relief. Now, the reality show like Shark Tank, uh, I I don't know. So, uh, I know 3, 4 companies who started because they wanted to create a Shark Tank in India, and till date they haven't created a Shark Tank because of reasons uh, like investing is still a kind of a, like, I don't my valuation to be known to the public. मैं tax नहीं देता, I don't pay tax, so how will I come out in the open that I'm investing 10 crores? So uh, and so all those factors are there. I don't see any particular reason why it should not do well in India. It should do well because venture capital and startup is after this government created Atal Innovation Mission, Invest India, Startup India, DPIT was created, and 10,000 crore was given to SIDBI for fund of funds for startups. And all this activity, like, look at the registrations in Startup India. 50,000 registrations, I mean, sorry, 50,000 startups have registered in Startup India. In just 2 years back, we were not even 30,000. So the way it has become a movement, this whole startup story, and people look at unicorns, people look at these young guns, what they are creating, and some sectors are left out, but la- it is majorly to do with technology. I think Shark Tank can do well in India. There's not a probably some of the factors which I told you, they might be a problem. Uh,
Yeah.
Otherwise, I think, and also don't forget that that the shock value which Shark Tank created in Australia or UK or US, Indians can create much more shock value. We can actually throw a person in the Shark Tank to get the mileage. So, so create a Shark Tank. Please do it, and I will be happy to participate.
I think it depends a lot on personal beliefs also. Some people might like it, some people might not like it. We can't be sure of a particular thing it will work out or not. But I think something based on a reality show will definitely work in India. We are too much engrossed in TV.
Yeah, but reality shows are also very they are controlled. So you
Yes.
had this reality show. Now they used to live in a house, Big Boss or something.
Yes. Big
So
Boss.
they create sensationalization. So uh, I don't know how they will manage in a thing like economy, which is more business. Talking gently about these things. And but I don't know, these three four companies which came to me and they wanted to start a Shark Tank, they never ended up starting it. So I will talk to them and see why that never happened.
So I think it is because, as we say, all that glitters is not gold. Something that is looking glitters might not be gold.
True,
So
true, true.
So I have a question. Like you mentioned, the investor portfolio. It might sound a little stupid, but is there something like a startup portfolio? What I mean to say is like a founder or any member of a startup, when they go to an investor, they have an idea, they have a product ready, they have all the strategy that they're going to launch. Is it like the investor looks at the profile of the founder, like what university is he coming from? Does that thing add a weight to a founder or to a startup if he's coming from a very world class university and the product is average, or if someone has a very nice product but they're not coming from a good university or they're not even graduate? So like university status and symbol is a huge thing in India. We run behind brand names. So can that somehow affect the startup in certain way?
You have hit the nail on the head, Tanisha, because I talk about this thing very passionately because I really have a lot of insights on this. So what happens is, okay, you are an investor, right? You
Yes.
have 20-year-old experience. You are uh, working in a pension fund, and you are managing $100 billion of the pension fund. You are a part of their team. Now you are asked to invest $100 billion.
Yeah.
As a person, will you put that money? Will you put that money in people who have come to you for the first time, and they are giving you good documentation and data about what they have created, and who came from some reference? You have to put like not less than suppose $1 billion. Now, will you put that money? Somebody came from India that I have created a venture capital fund, and so will you put that money in that person, or you are from Harvard and the alumni network? Somebody came you who is an alumni of Harvard, and you found out about the background from other alumni, and you are satisfied. So which person will you bet on? You will
I
bet on the person where you have trust.
Yes.
See, return is comes later. First comes the saving of the main money which you are putting. That nobody should eat it. It should
Absolutely.
not be diverted.
Yeah.
So that is the importance of these colleges, their alumni network, and it remains for lifelong. If you look at the VC funds in India, many recruit only from IITs, IIMs, Harvard, INSEAD, Stanford, MIT, because they are from there.
Yeah.
So they don't let you in if you are from a lesser college. You will have
Yes.
to do CFA, and after doing CFA, also you will have to prove yourself. So, practically speaking, look at Mark Zuckerberg, look at this guy, Apple founder,
Steve
they
Jobs.
Steve Jobs. They were dropouts from college. So,
Yes.
when they went to college, they saw the structured learning. They said that this structured learning we can learn ourselves in no time. Then why are we spending the time here? I
Yeah.
better create something. Bill Gates,
Yes.
he college dropout. So in India, the problem is the parents, they feel that once your kid has a degree, then
Yes.
he will have a fallback option for life.
Hmm.
That anytime he can say, no, 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 he's engineer, pay him 50,000, so that at least he has that kind of money. So they feel that, so I don't have a fault with that ideology. The only fault with that ideology is that job security is a four-letter word in today's times. The degree is not offering you job security. You have to upskill yourself, you have to cross skill yourself. You
Yes.
have to, and everything is available on internet to upskill yourself or to cross skill yourself. So that's the thing. Some are market realities that,
Hmm.
if you want to definitely being in the alumni network of Ivy League colleges, it helps a lot. It really helps a lot. So, and the second part is that if you are upskilling yourself and cross skilling yourself, and you are, you have learned the skill and not only taken the degree, then you will go a long way. Don't bother about degrees.
Sure. So I think in India, a lot of people hold back because of the parental concerns, like you mentioned. They should have a safety net to fall back if something goes out of the way.
Yes, and the good part is they nowadays I see, everyone wants to make the girl child study, because
Yeah,
she has to get up on her own feet no matter what. So
absolutely.
she has to live in a relationship with respect, with her own standing, and also never fall. And you know all that education, it is a permanent thing. So
Yes.
that is the, I see so many people, like, even if from tier 3 towns, tier 4 towns, they are very conscious about the girl child, and it is such a welcome thing to see.
I think this is something as a country we have achieved in the past few years, that we are
Yeah,
focusing more on women empowerment and girl education. So that is, we have come a long way that way. So
definitely.
one last question that I have in mind is the current ongoing trend we have with cryptocurrency and the level of craze people are showing in that. Is it good, or is it the right time? Like, the world is facing a pandemic. We have faced the first wave, now the second wave hit us so badly, now we have a new variant coming up. So in this current market scenario, where the Bitcoin or Dogecoin, they offer a great return in a short span of time, but is it a good time to put money into it, or should we just restrain back or try to experiment a little bit with it? What should be an ideal scenario?
So, Tanisha, the thing is, as I told you, money is available in droves with a lot of people on this planet, and they are chasing returns. So, what happens is they chase asset classes. And these asset classes can be real estate, it can be cyclical or non cyclical, like, steel is a cyclical commodity. It goes down for years, then it goes up for years. So there are cycles. uh, and then you have forex. You can bet on other currencies. You can you stock markets. And so what happened was, gold was a seen as a protection against the fall in value of the dollar. The dollar is used by 50% of global economies to transact, to do their trade. Whenever the market has a, like the Lehman crisis when it happened in 2008, the global markets were so worried that uh, the dollar will go down, the value of the dollar will go down. So they started putting all their money in gold. So gold is seen as a safety valve of the dollar. So what happened was, gold is uh, a commodity which is available in some countries. In other countries, it is not so easily available.
Yeah.
South Africa has a lot of gold. Does it mean that South Africa should become the richest country in the planet? No, the US will never allow that.
Yeah.
So they created new asset class to just for betting, and it is called cryptocurrency. So bitcoins have been around since 2010. Nobody was putting money in them. Suddenly
Yeah.
these rich people sitting in US, they decided Bitcoin पे punt शुरू करते हैं. Let us start a punt on this. And these people, they kept on putting money, so something which was 1 cent became $10, with $10 became $1,000, $1,000 became $50,000. Then they allowed banks to put in money, so banks have been putting $500 million. Again, for what? I mean, crypto can't be used. It is nothing. It's a number on the screen.
Yeah, and even in a country like ours, where even our own currency got banned at our own time, we can't trust something that is non-existent.
I mean, who owns crypto?
Yeah,
There are many other factors, like the governments, they are afraid also. Chinese
yeah,
government, Indian government, they are very afraid that once people, right now 1 crore Indians have invested in Bitcoin and other currencies. Once they make losses, so 1,000 people own 40% of the Bitcoins. Now these people are all the rich people, they are super rich. Once they decide to dump their shareholding and they exit, then they won't bother whether the currency is going up or down.
yeah,
Once they don't bother, the smart people will get out of crypto. But all these people with less exposure, India, China, all
hmm.
these people will be left with something which has no value.
Yeah,
Then the government will have to bail them out. So why
yes,
should government bail them out? The government is telling them even right now that don't invest in cryptocurrency.
yes. So the Indian government is making the right decision at this point of time in the
Yeah.
interest of the people.
Yeah,
Yeah,
but having said that, I also feel bad that I never invested in crypto and I missed out on making crores. So the thing is, if somebody was as smart enough, would have invested 3 years back and taken out his money by now. I wish there are people who would have done that. So, but again, I don't know. See, it is very difficult to judge the highs and the lows of any asset class because
yeah,
they move in waves. It's very
yeah,
difficult to judge the wave.
and something that is not controlled by the government will never be allowed in a country like ours
Yeah,
because there's always
absolutely.
an uncertainty about things.
And it also, crypto also is used for money laundering. For
Yeah,
uh, so uh, converting cash into white money is very difficult nowadays after the government clamped down on it. So it's very easy. You have a wallet with crypto. You go to a man, tell him that I'm giving you cash. You give me money back in cryptos. Then you go to use Dubai. Somebody opens your wallet, transfers the. So it's used for money laundering.
yeah,
But those people who have developed this, they say that it is used to better the banking system, the cross-border banking system.
yeah.
That is
So
it.
that's the case with crypto. I think we've answered almost all the questions in the comment section, and you have addressed my concerns also. So this was the first time I was attending something like this, something on venture capitalism and funding, because this is not my background, and I really enjoyed it, and I hope everyone who joined us today did. And this was the very first episode of the series on funding. We have a lot more coming up. And Tushar, I thank you on behalf of Incubatent for delivering this talk today. I mean, I got to know so much more about globalization, venture funds, things about I didn't knew even existed, like the Lehman crisis and everything. I'm definitely gonna study all of this because this is the reality of the world. And if we stay unaware, we're gonna lack somewhere.
Please
So
feel free to reach out to me anytime you want
yeah.
any question you want to study further. You want to, I will help you out. And thank you for all the audience which came today. I am available on my LinkedIn, Tushar Kansal, Consultancy Ventures, my website, consultancy.com, and also my email ID, which is tk Tushar Kansals tk at consultancy.com.
So I think they've put your LinkedIn email and everything that is available for people to reach out to you. We might see some investment from your side in some startups. So that can also happen. Some budding entrepreneurs are looking up to you right now, including me. So we would definitely love to connect with you. And thank you so much for joining us today. We have a lot more coming up in this series of funding. This was the first episode. Stay tuned with us for the second episode. We're going to deliver a lot of talks like this. I hope this event, the amount that you spent, the time that you spent was useful. And thank you so much for joining us, Tushar. I would like to end this broadcast now. Thank you everyone for joining us. Have a great day ahead.
Thank you. Thank you, Tanisha. Thank you, Samkit. Have a good day.